Okay, well, thank you so much for having me, and it's going to be a lot of fun. So we're going to talk about the dynamics of trading price direction. So, when it comes down to trading, it really comes down to price direction. So I'd say 99.9% of all your trades are going to be based on direction, and then the balance or big chunk is based on managing your trade, which I like to do through options. But we're going to dive into the kind of the directional side of things, and then I'll show you some great trade setup examples and take your questions and go from there. So I've been actively trading for over 30 years and was previously executive vice president for a company called Transworld Oil. It was one of the largest oil trading companies and trading companies in the world. We were big on oil, but we diversified out into all the other commodities too. So I got to see a lot of the different markets and trade the different market environments. But everything, like I said, really comes down to trading direction. And so we had actually developed a lot of different trading systems when I was at Transworld, and that really had me become really obsessed with trading market cycles and breakout type trades, and then incorporating options into that. So that's kind of where I got my background and everything, and so I'm going to share with you today a lot of the stuff that I've learned over the years. So the following webinar is purely for educational purposes. Any stocks, options, futures, ETFs mentioned does not constitute advice and should not be construed as a recommendation. So what is system trading? Basically system trading comes down to rule-based system that's going to add clarity and discipline and also confidence to any type of your trading. It could be day trading, swing trading, or longer-term trend trading. And for the best high winning probability trading, what I've found are there's certain chart patterns that I've identified that offer really great directional trading setups. So we're going to look at those and get into that in a lot more detail. Now, these patterns I've identified and broken them down into 5 specific patterns. And the one that I really look for the most and is most unique out of all of them, and can be in all the other 4 patterns, is what we call a volatility squeeze. Okay, so this is a period of tight consolidation where markets are kind of consolidating, churning sideways, and eventually you have a break either up or down out of that sideways consolidation. So we'll go through what that is. But this particular pattern can be within these other patterns that I've identified and defined, which could be a cycle high reversal, cycle low reversal, cycle low retracement reversal, and a cycle high retracement reversal. So what I found is if you can identify things that work and then that are repeatable and then define those and put it to a process, it becomes a really good trading system or dynamic trading process that you can use over and over and over again. So this is one step within this process. Now, the next thing is looking for directional trading tools and then incorporating those with what we call fractal analysis. So in order to better identify the highest probability trade setups, I always recommend that you trade with a system or some type of rule-based model. So, recommend trading with a model or system where the rules are clearly defined. This is going to make it much easier for you to implement your trades based on the rules that you're following. And a really good trading system should be a system that can be adapted to use across all major asset classes from a short-term time frame, intermediate, or long-term time frame. So it really doesn't matter if you're trading foreign exchange currencies, if you're trading futures, if you're trading stocks, ETFs, whatever, and you're trading on the Nadex, anything that you need is going to be based on direction. So you need a rule-based system that can help you get that clarity and confidence. So the power cycle trading model system that I've developed over years and years and years of looking at various different systems and models is based on 4 powerful indicators that I've put together that help to define price cycle changes. So I'm kind of, like I said earlier, obsessed with cycles. So it's done to identify a price cycle change by first identifying and giving you a really good visual defined price range, price volatility, change in the price cycle, and then the big kahuna component of that to get that price movement is momentum. So then it incorporates momentum cycle measurement indicators. So what this does is it provides a set of guidelines that allows the trade to come to you. And I say allows the trade to come to you because the biggest problem that most traders have, myself included, is one, you tend to overtrade, a lot of us do, and 2, you tend to chase trades. So if you can cut back on those 2 big problems, you're going to have much more success in your trading. So, if you use a rule-based system, it's going to help you to cuff yourself from over trading and also from chasing trades. So that's the thing that a model does for you, or a rule-based system does. So it gives you the guidelines and the rules, and then you stick to those rules and use them. So the end result is going to be that you're using a trading system that's going to make your entry and exit decisions based on the model that you're using and not your emotions of fear and greed. So, that's chasing trades. You're chasing trades out of greed because you missed it, so you chase it. And what tends to happen, you get in late, and then it turns on you, and you lose money. Or you're fearful of a stop, the trade's going against you, you get in, and you're fear of that, and you chase it, and you get out in the wrong point of the trade. So these are all things that are based on emotion. You want to take that out of your trading. So first thing to do is, what I want to do is identify those high winning probability type trade setups and the timing and exit entries for those. And so to do this, to get the best precision so you don't have any equity drawdown or as little as possible, is I use this cycle timing model that I've developed. I also use a cycle reversal indicator, momentum flows, very important for giving you price direction, and then using multiple time frames, fractal analysis, moving averages, which I refer to as automated trend lines, and Fibonacci support and resistance. So incorporating all this together creates kind of a trading process that will help you do something repeatable over and over and over if you just follow the same steps. So first off, the importance, why use fractal analysis, and what really is that? Well, it's really using multiple time frames. So when you start to incorporate multiple time frames, this will provide more clarity to overall trend. And also this can be used for your day trades, swing trades, or spread trades. So what you want to do is look for a longer term time frame to see the bigger picture in order to get the idea of general trend. And I refer to that as your anchor trend. And then you want to incorporate and kind of align your shorter time frames in line with the major, trend or your general trend, and that should be in support of that general trend to show trend strength or weakness. So what you're looking to do is always stay with your general trend that you're looking at. So when I'm looking at a swing trade, my general anchor trend, I'm kind of following that daily price trend, and then I'm trying to get into that trend. So you don't want to get into that trend at the top. You want to try to get in at the bottom. So it's really important to follow the cycles, and that's what I've done with the system I've developed, which we'll go through here in a second. So by employing these multiple time frames, this is also what's known as fractal analysis. So again, you're really never going to get the whole picture of a trend if you're just focused on one time frame. And then by following momentum flows across multiple time frames, this has really helped to create a really dynamic directional trading indicator or system. So what it does is that if you look at multiple time frames of momentum, it helps you to identify a new price trend cycle early, before it really starts to take off. Also, what it does, it helps to validate a trend's strength or weakness. So, when you're getting into a new trend or new cycle reversal or whatever it might be, you want to see what the strength of that trend is. You want to try to measure that strength, and you want to go with what's the strongest. And if it's weak, you can try to avoid it. And then it also helps to keep you into trend longer if you've got multiple time frames that are showing, really strong momentum either up or down. So that gives you confidence to stay in the trade. So it really helps in a lot of, these key different areas. So we're going to look at the best high winning probability trade setups, and this is going to come down to chart patterns that I'll show you, and then using momentum flows to show you the direction of the price movement. So the first one, and my favorite, and I put that number 1, is the volatility squeeze breakout. And again, this particular pattern can be inside these other 4. So we're going to start with that and then go through a lot of different trade setups and examples to show you what these look like. So first off, the volatility squeeze breakout. Now, what is this exactly? Now, when you study charts and price pattern, you'll notice that markets will kind of tend to move between quiet periods and volatile periods. And so a lot of times you'll see the markets maybe spike up real hard or spike down, and then they'll start churning, going sideways. So that's what we call the quiet period. And as a skilled trader, then what you want to try to look to do is get positioned during these periods of the quiet time, that consolidation phase, in order to take advantage of the inevitable spike in the volatility that can really explode your prices up or down out of that consolidation phase. And this is what we refer to as the volatility compression squeeze breakout. So it really gives you a great trading setup for very explosive moves up or down. So as a trader, then you can get, set up and get constructing a trade setup early to take advantage of that spike in volatility that will generally follow, causing what we refer to as this momentum breakout trade. So this setup can be really great, fantastic for swing traders, those trades lasting a day to 2 weeks, or even intraday day traders, and it offers potential for big profits in a very, very short amount of time. And when you're trading, remember that time equals risk. So, when you're trading options or anything, the longer you're in a trade, that presents more potential risk for that trade. So that's the other great thing I love about this compression squeeze type breakout setup, that it can really get you that trade moving quick so you can get in and out of it with a nice profit fast. Now, when a security you're trading, and it could be futures, it could be foreign exchange pairs, stocks, whatever, when that specific security has multiple time frames in this kind of volatility squeeze pattern, these breakouts can be even more powerful with greater follow through, kind of like a chain reaction explosion. You have one little small explosion that sets off the next and the next and creates this massive movement. So this chain reaction is kind of first set off by a lower time frame, which we'll go through, of a volatility squeeze breakout, and then that ignites the next time frame up, and so on until you get this bigger movement. So if you think about trading, you think about all the different levels of traders and trades. You've got the intraday traders, right? And then you've got intermediate, kind of shorter term, then you've got trend traders, long-term trades. So when you get a lot of powerful movement in the market intraday, that can set off that next level of trades and the next level of algo systems, and this is what can create trends, kind of like an avalanche or tsunami. So that's what we're trying to look for in these types of setups. So this is kind of a typical chart pattern, what it looks like for a volatility squeeze. So I'm looking for this really tight coiled consolidation phase, and then that's when you're going to try to take advantage to get in early into this trade. So if you look here, this is just an Apple chart, but if you look here, you can see how the price action right here, see how tight those price bars are? It's consolidating sideways, kind of really tight pattern churning. So what we've done is develop an indicator that can identify what we have set up as defined as a sideways price pattern, and when that price pattern's spotted, the indicators will pop up, kind of this dot that you see. And we have these color-coded to also to give you visual direction as far as momentum. So, we've got it color-coded purple, this magenta color, when our momentum indicators are showing negative momentum. And then when it goes yellow or green, it's positive momentum. So it's just another visual indicator to use. So when you're trading using charts, I like to have things as visual as possible so you can make quick decisions if you're, depending on your time frames that you're trading. So intraday traders, you need to be fast, and on a good swing trade entry, you want to get the best entry, so you want to be fast there as well. So here's that consolidation phase, and then the next thing we want to know, okay, which way will it break? Is this going to break out of this phase up, or will it break down? And to do that, we use momentum measurements to show us momentum, which can give us that directional bias that is more probability to trade up or trade down. Now remember, trading is it's a business of probability, so there's never any really perfect trade. We're just looking to take the best high probability shot and then take it from there. So that starts off for me using this volatility squeeze pattern, and then also incorporating the reversals with this, because you probably noticed from your own trading that when you get a powerful reversal in a market, those can be some of your best trades. So what we want to try to do is identify those reversals or those breakout reversals before they happen, so you can, take advantage and get in before the herd is in there before you. So here's some examples. Now this is a really good example of a volatility squeeze, how tight and clean these can be. And this is just on a, so these can be intraday, they can be longer term swing trades or even long, macro trends. But what you see here is just that tight price consolidation right here. And this is on a 5 minute, so it's perfect, for intraday trades or for an entry into a swing trade to give you a really great edge for your trade entry. So you can see the dots here when they started, and now they're all green. So that's positive momentum. So my momentum indicators are down below. So here's cycle 1, which is a momentum, and then cycle 2 is also momentum. So these are measuring momentum price changes. And so I use these together because one is faster. Cycle 1 is a faster momentum measurement, and cycle 2 is a really good confirming. And then this is what we call momentum flows. This is taking multiple time frames of momentum, basically 4 time frames. So again, when you have multiple time frames, this can validate a trend strength or weakness. So here you can see 4 time frames are in green, and when that happens, I've got this other row up here that lights up. So it shows you there's very, very strong upside momentum. So if you're looking at this as a potential trade, which way do you want to go? Do you want to go short or do you want to go long? Well, based on price momentum, if I'm going to take a shot, I want to take a shot to the upside. So if you never take a trade, if you never take a shot, you'll never score a goal. So what we're trying to do is get the best shot or best setup we can and then go with it from there. So that's a perfect example of a very tight, coiled 5 minute, and then explodes up. Now, we never know how far it will go, but that's where we can then use Fibonacci for price target analysis. So down here, though, is also the reversal indicator. So if you look here, we've got the first thing that you'll see is the reversal, okay, right here. That happens first. And then we've got this arrow here that pops up showing that reversal has happened. Now, the next step we want to see is this has enough momentum to get that reversal to actually turn. It's like a big ship. If you've got an oil tanker, on the water, it's going to take it a while to turn around. It's not going to be just like a jet ski boat, So you have to have some price momentum to get that to turn. So that's the beauty of it. First, we see it coming. We get a reversal indication. It will be 2 or 3 bars early. And then the next step, we want to look for price momentum. Cycle 1 and 2, you can see are pushing up. So that gives us the confidence, okay, let's take a shot at it and see how it goes. Boom. It goes up and, or you have a tight stop. Now, here's another example. Just throw in Bitcoin. Everything's the same. If it moves, you can trade it as long as you've got enough pricing data to give your analysis, your system some data to work with. So here you can see another very tight squeeze here. This was Bitcoin on a 30-minute time frame. And again, you'll see here a reversal first right there. Get the reversal bar. You can't, it's right up here, that purple, you can barely see it. And then we get momentum. So you can see these momentum indicators. You can barely see those arrows, but they're pointing down. That's cycle 1 and 2 had shifted down. So then it's a matter of getting into the trade. So what I like to do is once I get these indicators telling me the direction, then I'm looking for take the trade on either a break of a very defined trend line or moving averages. Okay, so boom. So then you take the trade and manage it from there. But the first thing is getting into a good setup. Here's another example on Costco, 30-minute reversal first. Again, right here, this arrow, you can see the reversal comes first. And then here's the purple reversals right there. And then these red are momentum flows going negative, cycle 1 and 2. Trend line break, see if that momentum shifts, and boom. So that's a 30-minute volatility squeeze. And then here's another example of over here on the right, it's a 4-hour time frame, the daily time frame, and a weekly. So this is on Micron, so you can see kind of a chain reaction. We had a break here on the 4-hour. We had a break here on a volatility squeeze breakout on the daily. And then we also had a weekly squeeze, which triggered, and look how powerful that was. So this weekly squeeze really provided huge momentum. So a daily squeeze ignites the weekly, and boom, huge move to the upside. Another good example, Honeywell. So this was in a very tight, look at that, how tight that price action was, just coiling sideways. So what you'll see here is that Honeywell had this pop up, and then it goes sideways. Okay, so what you're looking for is that sideways price action to stop and have a break either up or down out of it. And that's where it's really important to measure momentum to give your direction as to which way that's going to break. So again, the first thing we can see down here is that reversal right there. And here's the arrow showing the reversal. And then we have price momentum. We have those two arrows you can see, but that's based off this cycle 1 and 2 momentum down there. Trend line break or moving average break, you take your shot. Here's just some other examples, AKAM. Here again, multiple squeezes, a 4-hour squeeze here, ignites the daily, squeeze there, boom to the upside. Again, same repeatable pattern, a reversal pattern down here, cycle 1 and 2 momentum, in the daily you can see a reversal pattern. So all these things give you very heads up, warning and signals ahead of time of the potential trade and which direction it will go. Here's another one, take 2. These are all trade setups that we've done over, the last month. And this was on take 2. This had a really great, again, 4-hour squeeze here, you can see, with the daily squeeze. And so this 4-hour ignited the daily and boom, had a nice pop to the upside. Then we use our Fibonacci targets here for profit take and managing the trade. But again, the same common denominator here is, first off, we'll get a reversal pattern first. Okay, there, that's on the daily. Here's the reversal arrow here. Then we'll get the reversal, here first on the 4-hour, whatever lower time frames. And so you can see that here. But then I want to have confirmation with momentum. All right, so once I get confirmation with momentum, then it's a question of, taking the trade. How do you want to trade it? And I prefer to use options for those trades. And another good one, this was on Adobe that we had, again, a 4-hour squeeze right here. And what do we have? Reversal first, positive momentum, cycle 1 and 2, take the trade, boom, daily squeeze, reversal, and boom. So you can see how all these things just kind of fit and align together. So now let's take a look at some of these other 4 patterns, but a lot of times what you'll see within these patterns and what I look for is the squeeze to get really ignited out of that specific pattern. So this is what we call the cycle low. And basically what this is when you had a big hard downtrend and you're looking for that bottom. Sometimes it could be a V-shaped bottom. A lot of times it's kind of a rounded bottom. So when you get in a market where you have this rounded bottom, it takes a lot longer for it to turn. It's like that big ship. So many times in my trading career, I'll be taking shots to get in on a counter trend breakout, and you just get run over each and every time. So, from observations of what works, what doesn't work, I've come up with the system. So if you look down here below, this is what we call cycle 3. So this is measuring a change in cycle direction as well. And so you can see here where it starts pushing back above this level here. This is an oversold level. That is my reversal. Cycle 3 goes above this green line. So these two check off, and that's my alert to potential cycle change. But then to get that ship to really change, you need that momentum. So here's cycle 1, and then 2 confirms. You get in right there. So if you look back and observe price patterns, you can see here that if you were trying to get into that over the course of over a month, you would have been just getting run over, giving money back to the market and to the brokers. So you can see here how negative momentum was all the way until here, and that's when everything shifted. All right, so that keeps you out of getting chopped up, and then if you want to take the trade, that's where you take it and manage it from there. So that's what we call a cycle low reversal. Here's another cycle low reversal. Everything's a repeatable pattern. So we've got, again, here's your 4-hour time frame. We got a reversal here, cycle 1 and 2, so that multiple time frame. We've got a squeeze here on the 4-hour, and then here's Apple on the daily. And also you can see the reversal here, cycle 1 and 2. So here's where you get in and then take it from there. So that's the cycle low reversal. Now here's the opposite, cycle high reversal. And so many times, over the past 8-9 years, we've seen these markets cycle up. And then what they do is they start losing momentum. So that's where we want to then either take our profits or, potentially go short. Or what I love to do is sell out of the money, credit spreads. So here you can see this was an example on when, And so here's that purple arrow. So this is a cycle reversal signal. Okay, but then what I'm looking for is momentum to confirm that potential reversal. So we get momentum here, cycle 1, 2. And then this is the perfect place to sell credit spreads, because even if it just coils sideways, you're making money with your credit spread, or it may turn into something bigger. So that's an example of a cycle high reversal. And here's another example of a cycle high reversal on crude oil. Again, you can see the same repeatable pattern over and over. This is what we're looking for. Here's that purple reversal arrow, okay, right there. That's the indicator that gives it right there. But then we need momentum to make it go down, because sometimes you can get these reversals and price goes up. So we need momentum. We got it right there. So if you want to get out of your trade, you get out from your longs, or you could even look to take a short. And then again, multiple time frames. Here's the 4-hour time frame, and you can see it's reversal first. So this is always going to come earlier, and then you start getting these trend line breaks, and it really turns into sometimes an avalanche. And then here's the cycle low retracement, and this is a on QQQ as an example. So here's what we call a cycle low retracement reversal. And when I say retracement, so we're retracing into a moving average. All right, so these are specific patterns, and you can see here, what did it do? It retraced down, QQQ retraced down into this moving average here, which is a 50 moving average, and it held support. And then what does it do? It starts turning. So it's a reversal back up. So here again, you can see a reversal. You can see a reversal here on the 4-hour, momentum starting to shift. And then that gives you a chance to get back into the direction of the trend, the long-term trend. So a cycle low retracement reversal. And then here's another example. This was take 2, a retracement reversal off the 150 simple moving average. So I'm always following on the daily chart. I follow the 200-day, 150-day, 100, and the 50 simple. These are most traders will follow. So here you can see it comes down to, this is a 150-day moving average right here. And we get a reversal signal, 4-hour, etc. Momentum shifts back up, and boom, up she goes. Okay, so retracement. So by identifying these patterns, then you can kind of watch and see, you know, what's starting to set up. And so it really makes your trading a lot more defined and disciplined than if you're just, you know, not knowing what you're doing and is trading by the seat of your pants. And then here's the last example of a cycle high reversal. These are great when you come into a major moving average, such as a 200-period moving average. So here's an example of Ulta came into this 200-day or 200-period moving average and just got nailed. But then you can see reversal here, and then you finally rolled over. And when did it roll over? So look here, the first reversal, it just pulls back to the moving average. Okay, but we didn't have momentum, was still positive. But this next reversal, that's when it collapsed. See the momentum going down? That's when it collapsed. All right. So these are all key things that you can look at and identify visually with these types of indicators and measurements. Here's crude oil. Now crude oil came into a monthly 200-period moving average, nailed it, and failed. Here's reversal here on the weekly, and the daily had a big push back down. And here's a few others. Here's crude oil, just to show you some current things if you're interested. Here's crude oil. You can see again, here's reversal on a daily time frame up here. Okay, so crude oil had been a great trend to the upside here in May, and then look, it starts to, we get a reversal signal right here. Okay, right there. Here's the indication of it, the indicator, but then we need momentum to shift that and make it a reversal of the cycle. So you can see here was a reversal, but the momentum was still positive. Here the momentum goes negative, and then boom, it starts breaking down. And now we just had a reversal to the upside. So you know, once you know what to look for, these patterns can be, and the tools that we use can make these pretty easy trades to find, and then to try to trade, best to use options. So here you can see here's the reversal to the upside on crude right there. You can see the reversal happened down here, the lower study. And then we finally got momentum right here. Okay, so you could have taken the trade right in there and then see what happens. And you can see over here, it also had a squeeze going on here on the 4 hours. So this turned into a really beautiful trade setup to the upside. So that's an example there of crude. Here's a couple others. Here's, Apple. If you've been trading Apple, here was your chance to get out. Take your profits, wait for the next entry. So here's Apple, it had a pretty decent move up. Here's your reversal pattern right there. See the arrow? Down here it happens. And then we had cycle 1 and 2 go negative. And so you can see it starting to churn down. Now here's a really good one. If you've been trading Amazon, and it's been in just, in a massive move up. And again, it doesn't matter what it is. Nothing's infallible. But here's Amazon showing you that it's starting to top out. So here's a reversal right here. Okay, we get our reversal signal, but we need momentum to confirm that reversal. So here's a reversal right there. Now you can't see it, but that's a red arrow right there. So that's our indicator, first momentum indicator. So if I highlight that here, you can see that little arrow. So you can see cycle 1 went negative. Now 2 still positive. So we're still not totally confirmed that this thing's going to sell off. But anyway, point being is that if you have been trading this to the upside, this tells you to start getting out, taking your profit. And you see on the 4-hour time frame, we're getting all these reversal signals and now negative momentum. So we could get a bigger pullback here on Amazon. And then again, for the indexes, I love to use this type of reversal pattern for selling credit spread. So you get this pattern here, okay, reversal with negative momentum. See the momentum shift? Then you sell out of the money credit spreads up here. And even if it just turns sideways, you make money, right? So that's a great way to use it. The RUT, R-U-T, which is the Russell, another great example of, when to get out, start looking, for an exit. And right here, you get the reversal right there. And then you can see over here on the 4-hour, we're starting to get, that's rolling over. Now we're still positive there, so this thing could hold in. But once we start seeing that go negative, then there's a bigger, higher probability that we'll get potentially a bigger pullback. So again, the first trade setup could be to sell RUT, the RUT index, bear call credit spreads out of the money. And then one last thing to show you is just even intraday, how well this type of combination can work. So here's the 5-minute chart just on the NASDAQ 100. And this is what we call our opening range breakout indicator. So it actually does a calculation of the opening range, and then we're looking for potential breakouts or breakdown. But here you can see that the NASDAQ, this was on Friday. See how hard it broke down? But then look what happened. We have cycle 3 starting to turn up. We've got a reversal right here, down where my arrow is. Cycle 3 turns back up, and then we get positive momentum here, cycle 1 and 2, and we start getting that little bit of a grind higher. All right, so then it just starts grinding higher, okay? So you can see how this flow of momentum shifts that whole cycle, starts pushing higher, and then here's a volatility squeeze. We get negative momentum, so potential for this to move lower, and it does, moves down lower. So these are all things that, tools that I've designed and developed that really help with directional trading decisions. So I wanted to share that with you. Now, the next thing, that's the big important part, but, to take this, the next step is I like to incorporate using options, to define my risk and to use the leverage that they provide. So just some of the best strategies are to use directional long options, so buy calls or puts. My favorites are using the vertical debit spreads, so reducing my, at-risk capital, plus incorporating these for time decay, theta decay protection. And then one of my other favorite strategies is to use the long condor and butterflies. But here's a really good example of how to incorporate this with your trade setup. So this was based off of volatility squeeze breakout trade. So with this trade, we did just a long call debit spread. So this was on Texas Instruments. So again, we had, this was playing off of a 4-hour squeeze right here. See how tight that price pattern was right in there? So you had the breakup, okay? And then it goes sideways, starting to consolidate. So here was one on the daily right back here. This was early May. So the breakup, and then the next thing is to consolidate, kind of regenerate energy. And a lot of times you call that a bull flag. but we want to see and have confirmation that the break will be back to the upside versus maybe pulling back. So here's the volatility squeeze on the 4 hour. So we get the, we pick this up using a scanner that we have tied into it. So all the dots show the squeeze pops up. We've got a reversal here. We've got first the reversal back here. See that? And that started that trend shift. But here's a really tight squeeze. Then we've got cycle 1 and 2 going up. So you break, I like to use trend lines. So a break of that area here, boom. And then we put Fibonacci levels in to give us targets to set our trades up for. So based off that, we set up a call debit spread and very defined risk. So bought the 112, 115. It was trading at 111.50. And that's a $3 wide spread. So I paid $1.19 for that. All right, $119. So that's our max risk if we don't, do any adjustments. And then the max theoretical profit is it's a $300 wide spread less the debit. So 181 potential profit at expiration. So 152 or 1.52 to 1. I like to get a 1.5 or greater. And so it hit our profit target. So we took profit, and it turned out to be $141 per spread on the 6, which is 118% return. So here's what it looks like when you look at the analytics or the underlying profile. So the teal color here is the underlying, and then the purple is where it is in time. So it hit our profit target. We were looking for that fib level to up, around 117. So it got there, boom, and this was, for expiration the 16th, but it hit there, 10 days earlier. So boom, you start taking profit. That's your first, we call that target 1. All right, so we had the 119 and it went to 260. So you take profit, and then you can, either use a trailing stop, or a lot of times what we will do is we may convert this to what we call a condor, so we can lock in a spread here and reduce our downside, our risk, or the amount of risk we have with the credit spread that we sell against it. So that's kind of a typical trade setup that we like to look at using this type of, I call it a 7-step process. So what I'm going to show you now is if you like to, capitalize on trading price direction, cycles, and trends, I've got a really great package that I've put together for the Toast of Traders event here this weekend. And here is all the good details. Now, what you're going to get here, let me give you the link here, and it's you're going to get my directional trading model, my main model, plus my reversal indicator, plus a trading course that I just did on using these trading tools. So you're going to get all that and some other nice additional bonuses by using this link. Let me see here. Use this link here. So use that link, powercycletrading.com/2custom. So you should be able just to click on that, and it should pull up a payment link that you can use and just fill that out. You just put in credit card information or PayPal, whatever, and you should be good to go. So you'll get, I'll show you everything you're going to get. You're going to get the dynamic trading model plus a reversal indicator, plus you're going to get some other goodies here that you're not seeing. You don't need to put any promotion code in here or anything. Just fill out your information there, and then you can use either a credit card or PayPal. So use that link. So it's, again, powercycletrading.com/2custom. And, if you go to my website, these indicators, just the directional indicator alone is $397. And then you're going to get my reversal indicator, which is $197. You're going to get this new course that I just finished. This course was done about 30 days ago. So it's a 5-hour plus course that's now recorded on trading directional. So, what I covered here today in about the last 30, 40 minutes, this is a 5-hour course on using these trading indicators, the model, all these trade setups, the rules, etc. So you're going to get that as well. And then we'll get, about a week or 2 weeks, you'll get an email with a follow-up live Q&A So, any questions you have on any of this stuff, we can go through that. If you can't make it, it will be recorded, so you can just send in your question. So that'll be included. You'll also get my directional trading tutorial. So this is a tutorial with videos on how to use the directional trading model. And you're going to also get a futures trading commodity guide. So it's going to tell you everything you need to know. If you're not really familiar with futures and you want to know more about futures trading, the contract sizes, how they work, I'm going to put that in there as well. Plus, I don't have it showing here, but you'll get a free trial to my trading club. So a really big course package, 285-page training manual, 5-hour plus course, plus my dynamic trading model and my indicator on my reversal indicator. So let's go through the software that you'll get, and this is software. So with the dynamic trading model indicator 1, this is a 5-study package that's on this model. This has 5 different studies coded into this trading model. And so you can have it for Thinkorswim, TradeStation, NinjaTrader, eSignal. You can have one or all for this one price today, and it's yours forever. There's no licensing fee or anything. But, with this, again, it has 5 studies that are incorporated into this trading model. So you can see here's the volatility squeeze, and then you've got your momentum indicators here. And so that's the big part. But the big part of this is very visual. So the studies that are incorporated into this model that I created will show you the volatility squeeze, will show you momentum to give you the direction of price movement, and shows you the volatility range and also price range, support resistance levels over multiple time frames. So what I didn't show you here, I'll show you some other things that this gives you. If you look here, if I put this to whatever we want to look at, it'll give you support resistance levels based on either intraday, daily, or weekly. So if I break this down to a 5-minute time frame, you'll see that these lines here, so this is on the RUT. We can put in whatever. Let's put in the S&P futures just so you can kind of see how this works. But what you'll get, this is part of the model. You'll get the when you're below a daily time frame, so intraday, it's going to give you the prior day's certain levels, the high open, the high low close, and pivot point. So I'll put this on a 30-minute time frame and make it easier to follow. So here on the S&P futures, this was your Friday trading day. So up here you can see this green line, that would be the prior day's high. So that's Thursday's high. Here's Thursday's low, close, Thursday's low, and here's a pivot point. So a lot of traders trade off of pivots, so that's incorporated and calculated in there for you. And then these are Fibonacci levels, extensions way up there, which rarely get hit, but those are based on Fibonacci levels. So that's in there. You can see the volatility squeeze. You can see the price range bands. These are moving averages. This is the 50 simple moving average. It's color-coded. When it shifts down, it's red. When it's up, it's green. Support resistance, these are swing highs and lows. Those are put in there for you. Now, when you go to a daily time frame, this will show you the prior week's high-low close. So if we look here, we'll see that dashed green line there. You can barely see it because it's overlaid with that swing high. But that's the prior week's high, prior week's close, low, and pivots right there as well. When we put this on a weekly, this will be all the monthly, prior months. And look at here, we're in a weekly squeeze here. So we're going to be S&P futures is going to get rolling here up or down here in the next few days or weeks when that triggers. But here you can see now, here's the prior month's high, close, pivot, and low. So, and then these are extensions. So all that is kind of automatically calculated for you. So that's real beneficial to know where support resistance levels are for you, for your trading. And so those are given to you. And then the volatility squeeze, those are the, those dots show up here. So you can see here the volatility squeeze. Let me just pull this back up. You can see this. Here's your volatility squeeze indicator. So you can see when the squeeze starts, that shows up with the dots. right here. Here's a volatility squeeze triggered to the downside. You can see the momentum was down, so it shifted down. So here was, the S&P futures. This was back in March. You can see first we had a reversal here, so you'll get this indicator, and then you'll get the dynamic trading model here, and then you can see it was in a squeeze. Momentum is down, so boom, to the downside she goes. All right, so that's what you'll get there. And so here's from Gouldy, one of my members said, Larry, please tell everyone that these are by far the best indicators I've seen offered. I bought a number of different indicators in the past and have paid as much as $9.97, but I don't use them anymore. They're just too vague. I only use your set of indicators, and that was from Gouldy. Now, the next indicator you're going to get as part of this package is the cycle reversal indicator, and this has 2 studies that will come with this indicator. And here's the link again if you need it one more time. Let me copy and paste it in there. Again, you should be able just to click on it or copy it and put it in. So this is the cycle reversal indicator, and I designed this actually for spreads, but it works great for basically any kind of price action on anything you're trading and on basically any time frame. I like to use it on a 5-minute time frame for intraday, and then 15, 30-minute, hourly, 4-hour, daily for time frames above. But it's based on a range movement. It's a percentage range momentum indicator based on relative strength. And what it does, it's designed to measure an overbought, oversold condition, and then gives an advance signal. So this will give you an advance signal of a bar, 2 bars in advance. So if you have this, say, on a daily time frame and you get a reversal, that's going to be 1 to 2 days advance signal before the market may do that reversal. So what I like to do is use it for the actual kind of alert indicator, and then I want that momentum then to then come in to give me the potential to confirm that that will turn up or down. So then you've got the upper study and the lower study. Here's the upper study, and the lower study actually shows you the indicator, and it shows you based on when it crosses a certain moving average right here. The upper study will give you the arrows. So if you look here, we'll have a reversal arrow here for down right there and a reversal up here, and you make these any color code you want. And you can, in the course, it teaches you how to put the arrows as close to the bar or far away. So then you can color code them, red for down or purple, whatever, and then green for up. And it'll show you visually those reversals. And then when you incorporate that along with your momentum, you can get a great kind of a dynamic indication of a reversal. So here's just a kind of a one right here. You can barely see that purple one. It's kind of hidden behind the red, but here you've got the reversal plus cycle 1 negative. And so you can see how the market here on this example started to fade. And then here's cycle 2, boom, and then it really started to, drift down lower and lower. So that's what you'll get there. And that has a lower and upper study. The upper study showing you the arrows. And if you trade spreads, I love to use this for spread trading. You can see this is a reversal to the upside here on this spread. This was what was this? This was RBOB gasoline to heat. So you can see where that turned up. And if you play spreads, it's a great indicator for cycle changes on spreads as well. Now, the additional thing you're going to get is the enrollment bonuses. So you're going to get my new on-demand recorded power cycle trading, directional trading course. So this is a 6-hour course actually, and 300-page training manual of the course that will teach you all the indicators that we use, plus these directional breakouts, the rules that we have. I've got defined rules for these setups that's in the course. So it's an in-depth course to give you the highest, winning directional trading patterns. So it goes through those 5 chart patterns and very focused on the volatility squeeze within those. So how to identify those setups, how to trade them using these directional trading indicators. So very, very extensive, in-depth course on all that, the indicators and the rules that I use in those trading setups and the patterns. So you'll get then a follow-up accountability support Q&A, which will be recorded.